Hello, and welcome back to the channel. I'm Algabot, and this is where we break down automated trading strategies for MetaTrader 5, one piece of logic at a time. Today we're examining an expert advisor called Session VWAP Rejection Reversal. It's a clean, single-idea mean-reversion system built around just one reference line, the Session-Anchored Volume Weighted Average Price, or VWAP, together with a price action rejection at its deviation bands. By the end of this video, you'll understand how it builds VWAP through the session, how it spots a rejection candle, and how it sets its stop and its target. Let's get into it. Let's start with the big picture. Session VWAP Rejection Reversal is a mean reversion expert advisor, which means it's built on the idea that price tends to drift away from a fair value reference and then get pulled back toward it. The reference line here is the session-anchored VWAP, the volume-weighted average price. Unlike a moving average, VWAP weights every price by how much volume traded there, and it's cumulative from the session open. Because many institutions benchmark their daily fills against VWAP and treat it as fair value, intraday price is repeatedly drawn back toward that line. That tendency is what this strategy studies. What makes this expert advisor distinctive is its simplicity. There is no RSI, no moving average, no ATR, nothing but VWAP and the candles themselves. Around the VWAP, the strategy builds an upper and a lower band. Each set a chosen number of volume-weighted standard deviations away. Those bands mark where price has stretched unusually far from fair value. But a band touched by itself is never traded. Overstretched price can keep running, so the EA waits for evidence that the move is exhausting. That evidence is a rejection candle, a bar that pokes through a band with a wick and then closes back inside it. The wick is the footprint of buyers or sellers stepping in at the extreme. In terms of who this is for, it's an educational tool for traders interested in intraday mean reversion on liquid markets. Think an FX major like Eurist or an index such as US 500 on something like the 5 or 15-minute chart. It's a study in doing one thing well, rather than stacking many indicators on top of each other. Remember, none of this is a promise of results. Trading always carries the risk of loss, and this video is for educational purposes only. Now let's walk through the mechanics step by step. Everything begins with the session. At the start of each new trading day, measured in UTC, the EA clears its accumulators and starts rebuilding VWAP from scratch. For every bar that closes, it takes the typical price, the average of the high, the low, and the close, and multiplies it by that bar's tick volume. It keeps a running sum of those values and a running sum of volume, and dividing one by the other gives the live VWAP. It also tracks the sum of typical price squared times volume, which lets it compute a volume-weighted standard deviation around the VWAP. From that standard deviation, it draws two bands. The upper band sits a set number of standard deviations above VWAP, the lower band the same distance below, controlled by the band multiplier input. These bands expand and contract as the session's dispersion changes. The EA won't act until enough bars have accumulated in the session, set by the minimum session bars input, so that VWAP is statistically meaningful early in the day. It also checks that only one position is open at a time, and that the current spread isn't wider than the allowed maximum. Now the signal. For a short, the just closed bar must have a high that pierces the upper band, but a close that finishes back below it, and the upper wick must make up at least the minimum wick ratio of the bar's total range. That combination says price stretched above fair value, was rejected, and snapped back inside. The EA then signals a sell. Its stop loss is placed just beyond the rejected high, with a small point buffer, and its take profit is VWAP itself, the fair value the strategy expects price to return to. The long is the mirror image. The bar's low pierces the lower band, the close finishes back above it, and the lower wick dominates the range. The EA signals a buy, places its stop just below the rejected low, and again targets VWAP. Finally, every setup must pass a reward-to-risk filter. If price has already drifted so close to VWAP that the potential reward is too small relative to the wick-based risk, the setup is skipped. In this way, the risk is structural and self-defining on every trade, taken from the very wick that proved the band held. Let's look at the actual MQL5 code running inside the expert advisor. At the top are the inputs you can adjust in the strategy tester. Band multiplier sets how many standard deviations the bands sit from VWAP. Minimum wick ratio defines how dominant the rejection wick must be. Stop buffer points adds a small cushion beyond the wick for the stop. Minimum session bars is how many bars must build before VWAP is trusted. Minimum reward risk is the filter on each setup, and maximum spread points blocks entries in poor conditions. Lots and magic control the order size and identity. Below the inputs are the two signal blocks. The short block reads, if the close bar's high is greater than or equal to the upper band, and its close is below the upper band, and the upper wick divided by the range meets the minimum wick ratio. When that's true, the stop loss is set to the bar's high plus the buffer. The target is set to VWAP, and after confirming the reward to risk passes, it calls trade.sell with those stop and target levels. The long block is the exact mirror. If the close bar's low is at or below the lower band, the close is back above the lower band, and the lower wick dominates the range. Then the stop is the bar's low minus the buffer. The target is again VWAP, and trade.buy is called once the reward to risk check passes. Notice that both sides take their stop straight from the rejection wick and their target straight from VWAP, so no separate exit logic is needed. Let's bring it all together on a chart and watch both a long and a short trade play out. On screen you can see candlesticks with three overlaid lines. The gold line through the middle is VWAP, our fair value reference, and the two blue lines above and below it are the upper and lower deviation bands, each anchored to this session. Watch the opening candles. Price is hovering near VWAP, drifting calmly within the bands. So there's no edge here, and the strategy simply observes. Then, over the next couple of bars, price starts sliding lower, pulling away from VWAP and heading down toward the lower blue band. This is the stretch the strategy is waiting for. Price moving an unusually large distance below fair value. Now look closely at the rejection candle. Its low spikes down and actually pierces below the lower band. For a moment, price is trading well under fair value. But by the time the bar closes, it has been pushed all the way back up, finishing above the lower band, and leaving a long lower wick beneath the body. That wick is the heart of the signal. It shows that as soon as price dipped to that extreme, demand stepped in and lifted it back inside the band. Because the wick makes up more than half of the bar's range, it qualifies as a genuine rejection, and the EA signals a buy at the close. The stop loss is tucked just below that rejection low, and the take profit is set right at VWAP. From there, follow the trade. The next candle turns up, then the one after pushes higher, each bar climbing back toward the gold line. Price is doing exactly what the mean reversion idea expects, gravitating back to fair value. A few bars later, price reaches VWAP, the take profit is filled, and the long trade closes for a move from the band back to the mean. But the chart doesn't stop there. Price has momentum, and it keeps pushing up past VWAP, climbing toward the upper blue band. Again, the strategy waits patiently as the candles rise. Then comes the mirror setup. One bar spikes sharply upward, its high poking clean through the upper band, but the buyers can't hold it. By the close, price has dropped back below the band, leaving a long upper wick standing above the body. That tall wick is the rejection at the top, supply stepping in where price stretched too far above fair value. With the wick dominating the bar's range, the EA signals a sell. The stop loss goes just above that rejected high, and the take profit, once again, is VWAP. Now watch the short play out. The following candle rolls over. The next one continues lower, and price slides back down toward the gold line. Step by step, the move retraces, just as it did on the long side, but in reverse. Price arrives back at VWAP, the take profit is filled, and the short trade closes. Notice the rhythm here. In both trades the logic was identical. Wait for price to stretch to a band. Demand a wick that proves the extreme was rejected. Enter on the snapback. Risk only as far as the wick, and target fair value. The bands defined where price was overextended. The wick confirmed the turn, and VWAP gave a clear, objective place to take profit. That's the entire strategy in one picture. A disciplined fade of overstretched price back toward the session's volume-weighted average. Of course, not every rejection leads to a clean return like this. which is why the stop beyond the wick is there on every single trade. And that brings us to the end of our breakdown of the Session VWAP Rejection Reversal Expert Advisor. We've covered how it anchors VWAP to each session, how it builds its volume-weighted bands, how it waits for a rejection wick at those bands before signaling a trade, and how it takes its stop from the wick and its target from VWAP. Everything you've seen here is for educational purposes only. It is not financial advice, not a recommendation, and not a solicitation to trade. Trading carries a real risk of loss, and no strategy works in every market condition. If you found this analysis helpful, please like the video, leave a comment with the strategy you'd like to see next, and subscribe for more MetaTrader 5 strategy breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.